is the biggest factor in landing a job, your resume or your credit? A survey by the Society for Human Resource Management showed that 60% of companies get credit checks for some or all of their job candidates. But does a credit score, especially a high one, indicate a better applicant?
But a poor credit score doesn't necessarily reflect that. It can reflect a lot of things outside someone's control. Right now, you have about 6.5 million Americans who've been out of work for 6 months. Let's examine what happens to a credit report during those 6 months. As the income dries up, people are less able to pay their bills. They're more likely to have delinquencies on their credit report. At that point, when they start applying for a job and steady income will resolve their problems. But if you're denied based on a low credit report, it's as though you're being denied a job because you don't have a job. And that's the kind of institutionalized catch-22 that we should do everything to avoid during times of economic distress.
Do you know what your credit score is? You should, because it's an important number in your life. It affects your credit card interest rates, how much you pay on car loans or a mortgage. It can even affect whether you land a job. Luckily, you have a lot of control over your score. The best thing you can do, make your payments on time, pay off debt, and keep your credit cards in good standing over long periods of time. There's also a lot of myths out there on what can impact your score. Let's take a closer look at them. Myth number 1, each person has one credit score. Not true.
We're back at 8:44 this morning on today's Money. 5 ways to improve your credit score. It impacts all areas of your life, from getting loans to how much you pay for insurance, even whether or not you might get a job. And right now, more than 43 million Americans have credit scores below 600. Jean Chatzky is today's financial editor. Jean, good morning to you.
Good morning.
We cover a lot of trends on this show. This is not a trend we want to be a part of, falling credit scores.
That's right. Historically, only about 15% of Americans had credit scores in that very low range.
You know, your credit score is the key to getting a credit card, a mortgage, even a good job. But you may be surprised to learn all the little things that can bring that score down. Our financial contributor, Melody Hobson, is here with some tips on how to keep it solid. Good to see you again.
Good to see you.
So we should say at the start, your firm actually owns a small piece of one of these rating companies. So you know all about it. But most people have no real idea what goes into a credit score.
It's a complicated formula, but it's based on 5 basic things, and it's really easy. So first, do you pay your bills on time? Being late makes a huge difference, is very bad.
In this morning's Money Watch, your credit card. Do you really know how to use your credit card in the right way? CBS News business and economics correspondent Rebecca Jarvis is here to separate fact from fiction about your credit card. Good morning.
Good morning, Harry.
One of the big reasons we're doing this is because your use of your credit card is very tightly connected to your credit score, correct?
It is tightly connected to your credit score, and just the mere application for a new credit card or a new line of credit in any way, whether it's for your home, for your car, is going to impact that score. And that score is the #1 thing merchants look at, employers look at, all of these people look at it to determine whether you can get paid.
So #1 misconception about credit cards.
#1 misconception is that you don't need to activate your card.
You're entitled by current law to explain away what might be detrimental on your credit report. So imagine having to go before a potential employer and explain your cancer treatment that has caused you to have a bankruptcy or poor credit. And that employer thinking, well, I don't want my company's insurance premiums to go up. I'm not going to hire this person. Imagine having to go before an employer and explain away your divorce or explain away some other tragedy that has caused your credit score to drop. Historically, minorities have had poor credit scores. Is that an excuse that employers could be using not to hire a minority? Historically, young people who have not had a chance to build up their credit have lower credit scores. Is that an excuse that employers could be using not to hire somebody? This is a direct assault on somebody getting a job, and it's also an indirect assault on somebody getting a job. There's no purpose for it. What we have found is that an employer is just as likely to throw darts at a wall full of resumes and find somebody as responsible as using a credit report to determine their responsibility as an employee. So I hope that we can push this through both chambers, have the governor sign it, and make this law by this year. Thank you.
The Senate Democratic agenda also includes legislation to prohibit employers from using your credit score in making a decision whether to hire you. The recession has taken a toll on people across our state, and unfortunately, lower credit scores are a fact of life for many that have experienced financial strain. For those who want to get back on their feet and get to work, their credit score should not prevent them from getting a job.
Senator Jim Carlson of Egan said that people like that shouldn't be disqualified from jobs because of a credit rating.
If you've fallen into hard times like lost your house or lost your job and then lost your house, you know, that can really affect your credit score tremendously. If you're handling money, that you certainly, the employer can certainly use credit scores and certainly deny you employment because of it. But my issue is that I want to make sure that we give the people who actually don't have a personal behavior that's caused their credit scores to deny them employment.
Our state has gone through a very tough recession, and we don't want people who have battled that recession, who are living from check to check every month, to be harmed when it comes to getting employed. And that's why today the bill I'm signing, I think it's a very important consumer and worker protection bill, will not allow employers to use credit score to decide whether or not somebody is going to get a job or somebody is going to get a promotion. I think that those who have done their level best to pay their bills in the course of this recession, which has been a very difficult one, I think everybody in our country knows that Wall Street let America down. President Bush, frankly, asleep at the switch when it came to regulating Wall Street several years ago, and Wall Street ran the American economy into the ditch and caused great harm and travail for ordinary people in our state and every state.
If you lose your job and your credit is damaged as a result, and if employers use your credit to prevent you from getting a job, this is a vicious cycle that folks will never get out of. So this bill strikes an appropriate balance. It says as a general principle, employers can't use your credit history, your credit score in determining whether or not to hire you or promote you. At the same time, it provides to those employers who have a legitimate need to look at an applicant's credit history.
We cannot allow folks who are doing their level best to be discriminated against with respect to getting a job or keeping a job. And unfortunately, some employers are using credit score of an individual person to decide whether someone gets hired or someone gets retained on a job or someone gets a promotion on that job. And I don't think that's fair, and I think the members of the General Assembly feel the same way.
Welcome to the drawing board. We start today with a question. Do you know your credit score? Chances are a lot of you do. Why? Well, a lot of companies are calculating and tracking them these days, and your credit score matters. If you want to buy a house or a car or a refrigerator or insurance, or if you're applying for a credit card or even a job, someone somewhere is going to take a look at your credit score. And generally, people with higher credit scores get better deals on all kinds of loans, they pay lower insurance premiums, and they have an advantage when applying for jobs. Now, we've come to accept this, but do you really know what you're looking at when you see your credit score?
They didn't do what they promised they would do the first time around. Shouldn't that be reflected in some way in the credit report?
Well, let me tell you that many of my constituents have been contacting me on the issue, and they're being told by their lender, we will not negotiate a modification until you are late in your payments. Now, these are people that have been paying every month on time and now are being told you need to be in default in order for us to renegotiate and to modify your loan. Yeah. It's a serious problem. Let's talk about the fact that these credit scores are used by prospective employers. These credit scores are also used for lines of credit for small businesses. We are in a crisis in housing in this country.
The use of credit checks to determine employment is a growing trend, but a dangerous trend. And while some submit that it's an effective tool, that business must find it effective, I would submit to you, Mr. Chairman and members of the committee, there's no way business can know it's effective, because if they don't give a person a job because of a bad credit score, how do they know that was a bad employee? They never hire anybody that had a bad credit score if they use that as the determining factor not to hire them. So they never know. They hire the other guy or the other woman.
It's a tremendous problem. People who have poor credit scores oftentimes are thrown into a cycle because they've lost their job because of this economy, and their scores get worse. They don't get out of it, and studies show that credit scores don't reflect whether you'll be a good employee or not, or even whether you'll be trustworthy. So they don't really bring about the result or prove anything that the employer might be looking for, but they deny a lot of people the chance to get a better credit score by getting employment and getting income, and it turns into a vicious cycle. And it affects minorities, African Americans, Latinos, and women more than anybody else. In fact, the EEOC recently ruled that Kaplan University, using scores, has discriminated, not intentionally, but in effect, on African Americans and Latinos because they're more likely to have low credit scores, but it doesn't indicate any trustworthiness or effectiveness in an employment position.
When they access their annual free credit report. Now, I'm making that distinction, Mr. President, between your score and your report. A report tells consumers what outstanding credit accounts they have open, like student loans or credit cards, maybe a car or even a home loan. Unfortunately, it tells Americans little else, and often they already know, they hopefully should know that information that's in their credit report. Now, in contrast, Mr. President, your credit score, which our legislation would make available, is what banks and lenders and increasingly even employers have access to. It's critical information each one of us needs to know. But today, you and I, Mr. President, we'd have to jump through hoop after hoop and ultimately have to pay to have access to our own credit score, while banks and lenders can get a hold of this information much more easily. And, Mr. President, I know your history. That's simply not fair. I know you've been a strong advocate for fairness in America in whatever walk of life. In 2000